Welcome to Behind the Bottom Line podcast. I'm Adam Hayes, and to my left is my co-host, Bob Paden.
Good day.
And across the table from us today is Nathan Nichols with Storie Co.
Howdy, howdy.
Yeah, welcome to the show.
Thank you for having me. Happy to be here.
Yeah.
Thanks for coming.
So what is Storie Co?
Storie Co is an Indianapolis-based hospitality firm. We invest, we develop, and we asset manage resort real estate, predominantly in the Midwest. We focus on assets that can provide a unique experience to guests, typically trying to get them out of their day-to-day routines and focused on the outdoors or kind of immersed in the natural environment.
That's pretty cool. Give us an example of a property like
That's
that.
what I was going to ask.
Yeah, so Pine Mountain Resort in Iron Mountain, Michigan, I think is a really good example. That was actually our first acquisition. It's 360 acres in the Upper Peninsula of Michigan. It's a 35-run downhill ski mountain. It's 18-hole championship golf course.
Even better.
Yeah, that's right.
Yeah,
Especially for our golf professional over here.
There's plenty of room to lose golf balls
Absolutely.
up there.
You know what? It's a fun course. We got to get you up there. It's top 10 rated in the state.
Nice.
And it's pretty beautiful. But it's 6 miles of downhill mountain biking, 55 rooms. We're adding 34 more keys to it. Sort of the mecca for you want an ATV,
Nice.
hike, golf,
And so
fish.
are there ATV rental?
There are, yeah.
Okay.
Of course.
If there's a amenity that gets people outside or one that's sort of adventure driven, we're there for it. We just signed a lease with an axe thrower by way of example.
Oh, really?
Yeah,
Oh, that's cool.
we're
That's cool.
excited.
So the idea of skiing and golf and ATV is kind of a 12 month gig, right? So you could go up there, anytime during the year and have fun and experience the outdoors.
That's right. You're hitting the nail on the head. Oftentimes our role when we're acquiring a property from somebody who's maybe more mom and pop as an owner operator, our mission is to smooth out seasonality,
Right.
bridging all four seasons with different activities that get folks outside and drive demand. That's high on our list, but it's coupled with, things like layering in group business or, an airline
Outings.
contract,
Right.
outings, things just like that.
Sure.
Yeah.
So tell us the story of how you ended up doing this. You're looking like a fairly young guy here. So
Oh, but
Right.
man,
unless you're like 50 and just by magic, right?
I was 65.
Oh, fantastic.
No, I am young. I'm 33, and I started my career as a busser.
Okay.
And I always mention that every room needs a lay person to be in it, and I serve that purpose. I am rarely the smartest person in the room. That's continued in this room today. But I grew through the ranks of hospitality really quickly. I was in the GM chair probably long before I was ready.
Okay.
If that owner is listening, he'd probably agree.
We'll call him out later.
That's right. That's right. But I focused mostly on independent hotels and resorts that had struggled to perform fiscally. Worked with a host of different management companies and ended up being moved really all around the country. From San Diego to Los Angeles to Palm Springs. I spent time in Nashville and Seattle before moving to Chicago and Tampa and now Indianapolis. But I was asked to join the principal side of the business with a mid-sized real estate investment trust called Watermark Lodging Trust, at the time Carey Watermark.
Okay.
And for them, I was responsible for their assets at risk of going back to the lender, challenged assets. And I grew with them to oversee about a third of their portfolio, or $1.5 billion of their real estate spread across the U.S. And that's where I met my business partner. Jump into that. He's the complete other end of the spectrum from how our brains work and personality. He started in the world of banking and launched the hotel lending platform for BMO out in San Francisco with a colleague at Wells Fargo.
Okay.
Before he joined Watermark to work on their transaction side. And so he did $4 billion of hotel financings and refinancings. He did 11 dispositions. He's a wildly smarter guy than I. In fact, you all should have him on here at some point.
Sure, anytime.
But he and I worked opposite of one another. An asset would come into my portfolio. We'd work to improve NOI, net operating income.
Sure.
He'd take it out for a refinance or for a sale. That would recuperate value for investors and sponsors, and we'd rinse and repeat.
Right.
And we found, he and I became really good friends. We started investing together passively. And, we started to think, gosh, we should raise some capital around this. We're yielding real return. We went out to our first limited partner investor with what we had been doing passively, which was we were investing in some single family, multifamily assets. And they said, you've got this all wrong. What the heck are you guys doing? Your entire lives have been dedicated to hospitality. You got 30 years between you. And
why are we doing multifamily? Right?
Quit. Yeah. What are you doing?
Yeah.
And the light bulb went off, right? We recovered $265 million for investors and sponsors in the space of hospitality.
Yeah.
We can do that for our own investor group.
Right.
And shortly after, Storie Co was born in 2022.
Post-COVID. Okay.
Post-COVID.
Now we're talking. Yeah.
That's right. And we focus specifically where those larger groups like the REITs, like the life insurance companies, where they're not. So, there's the adage that there's riches in the niches, and ours is the Midwest. Ours is in these densely complex resorts that focus on getting people outside. Yeah. And then we're focused on what our total capitalization is. And we find we're fishing in small ponds, or we're the bigger fish in that pond, whatever adage you prefer. And so started in 2022, bought our first 2 hotels in 23, on track to acquire 4 this year and continue with that style of trajectory.
I love the niche. I mean, we talk about niches a lot together, obviously. I mean, and just hearing that story and looking you up online and those kind of things, I was like, this is going to be interesting, right? Not a lot of people I know and that are in the niche you're in, right? I mean, it's fantastic. Enough just the business aspect of it. And, we'll dig in a little bit of what that looks like for an owner on the other side, right? But I love the fact that you've defined this is where we're playing. That's just fantastic.
So I'm going to ask you some questions that you may not want to answer. And if that's the case, just tell us.
Yeah. Just say
But
no.
when you go into invest into a property, does the owner typically stay on and stay the owner operator, or is that, does that vary
Is
by
there an
the
exit? Yeah.
Yeah, that's a great question. It varies by asset. Predominantly, we are going to acquire the asset, and it'll be a clean break from the previous ownership group. Certainly, management changes. In select circumstances, we have owners that will stay on in like a preferred equity or in a limited partner equity position.
Sure.
But that's really on a deal by deal basis. But with full disclosure, we make a big change when we first acquire an asset. These are assets that, I'll give you an example. We talked about Pine Mountain. The general manager was the diesel mechanic, and that was his primary role. They had only ever advertised via radio. And this is going to shock you, there are alternative ways to market hotel and resort product besides that. And, they didn't have internet because it was $14,000 to dig the fiber line, and that was untenable. And so oftentimes we make immediate change that's significant when
because you have the capital to do it.
Partially because we have the capital, and partially because we've had the pleasure of seeing 48 hotels and resorts in our background in a lot of different markets that operate a bit differently.
Sure.
And some of that can be jarring for especially family-run owner-operators that are used to a very structured way of doing things.
Their way.
That's right.
Yeah.
And so we find that the investors or owners that choose to stay on as investors later are those that can see that they're ready for a change, and that maybe they're not the right ones to execute it, that they'd like to stay in and yield the gains.
Sure.
But they don't want to drive the ship anymore
Sure.
or drive the boat anymore.
Tired, exhausted,
I felt
worn
relief when you came in and said, you know what, you guys can help me get to the vision that I imagined. I want to double down and turn this buyout into shares and equity and whatever you're doing.
You bet.
Nail on the head.
Right.
Nice.
Yeah. So what are the common things that you see, or the common themes that you see when you go to a property and you say, you know what, this looks like something that would fit us, what we've done in the past? And then kind of, do you have a specific playbook that you say, here's the 5 or 10 things that we're going to do and get this thing rocking and rolling?
Yeah, so we do. Our general strike zone or pillars for it to be a good fit for Storie Co today, we do look for it to be locationally in the Midwest.
Okay.
And don't get me wrong, we've looked at assets outside of there. Exceptions get made, but core focus for us really is Midwest driven. We wanted to have a real focus on outdoor recreation. You know, we're closing on a project in Ely, Minnesota next month. And that's right on the boundary waters with Canada. Huge fishing, snowmobiling, dog sledding. Surprisingly, Ely, Minnesota is the focal area for dog sledding in the United States. There are more dog sledders there than anywhere else.
So they train for the Iditarod there?
That's right.
Really?
Yep.
Another niche.
Another niche.
Right.
Yeah. So that's a perfect fit for us where we're right on the water. Closing on a couple of projects in Michigan that sort of mirror that in nature, but it's got to have outdoor complexity, full service. It's got some food and beverage, maybe some meeting space. These are and typically priced between 15 and 50 million total capitalization. Okay. That's a good initial buy box, but from there's really a lot of work to see if it's a fit for us. We yield return for our investors by buying it right. We are typically cap rate buyers, meaning a multiple of the in-place NOI. And we couple that with, we'll go through with a preferred management partner and we'll identify where there's operational opportunity. And some of that has to exist for it to be a fit for us.
Sure.
If
there's no upside.
Yeah. If it's a stable asset that's a cash flow buy for somebody, that's great. It just isn't us.
Yeah.
We're the buyers of assets that need improvement. We're the buyers of assets that have some level of distress where we can, I like to say there's all types of fun and creative things that you can do to generate demand and to capture it. And we don't underwrite any of those. We only underwrite what's broken and what is the yield if we fix those things that are broken. All those fun and creative things after that should be the gravy for the investors and for ourselves. So for it to be in our buy box, it's got to be in the right location. It's got to be capitalized correctly. There's got to be some level of distress, and it's got to be bought correctly.
Right. And then do you do some kind of analysis in advance? Like what kind of demand can we generate for this?
Yeah. In the world of hospitality, there's a lot of reporting that's available. Where we struggle is the more remote the location, the less reporting available because the fewer reporting parties.
Right.
So, Smith Travel Report, STR, is one of the leading forms of reporting in the hospitality world. It gives occupancy, average daily rate, and revenue per available room for most of the hotels in the United States. Folks report in, and then you get anonymized, information about a grouping of hotels in your market. You can use CBRE, who puts out a great Hotel Horizons report for a greater market. That's more commonplace if you're buying in Indianapolis or if you're buying in Detroit and you want to know about your submarket.
Right.
And then the last is, we'll make site visits to a number of different competitive assets in the market. We'll shop them.
Secret shopper type. Yeah,
that's exactly right.
Well, that seems fun.
Yeah.
It's, it's the toughest part of the job.
Is it really?
Total business write-off.
That's right. Gosh, you got to go out and see the great assets.
Right.
Yeah.
I will tell you, when you go to a market and you're touring the upper upscale properties in market, that's a ton of fun.
The downside
is you're also touring the motels in market.
Yes. With a half-broken ski-doo and a boat that's sinking.
And sometimes that's what we're acquiring, right? With the intent to fix and improve.
What do you see as the commonalities in general to those type of owners? Are they quote-unquote pre-retirees typically, or are they not? Who's kind of in that space that typically is that identified, owner of that type of property?
We have a lot of sellers that are second generation, or at the period of transitioning to the next generation. Oftentimes, grandpa's vision isn't the same as dad's.
Correct.
Or grandma's vision isn't the same as mom's. And especially when it starts to transition into multiple siblings, sometimes that can create conflict.
Very much so.
And when you're facing an asset that really needs a renovation, sometimes investing capital into something you're not passionate about looks less attractive
You
than
bet.
a check.
When all the siblings are looking at each other
Yeah.
in a room,
That's
going,
right.
"Hey, are you ready to put up about $2 million?"
That's right.
Like,
Yeah.
That, or, there is some level of distress in the greater market in the
Sure.
world of hospitality. I think that's not true. That's not dissimilar to what we see in the world of multifamily or really in any asset class. When you see, call it a liquidity crunch from a capital perspective, or when you see it especially from the lending community,
Right.
you have some folks that are in a real jam who signed a 5-year loan and now that term is over.
Right.
And
Before the loan's over, or before the, everything else is,
they're not
timing mismatch.
right. They're not ready for a refinance. And guess what? It's not in market.
Yeah.
And they're probably not going to just pay down their loan. And so we find a little bit of distress in that form, where we can step in and, look, we put together great deals for our investors, but we always try to create win-win-win scenarios.
Sure.
We want that seller to walk away happy. And so we try to find a solution that helps them to get out sometimes out from under, $1 million
really bad
a
situation.
year of debt service payments that they don't have a solution for.
Right.
They're treading water.
That's right. We find the last is the folks that are tourists in the space. Just like in the world of restaurants, there are folks that say, wouldn't it be fun too?
Yes.
And the answer is, it's
No.
a lot of work. No, yes, no, it's not.
Wouldn't
Yeah.
it be a lot of work too?
Yeah.
Yes.
Yeah, you're right. You can buy yourself a job.
That's right. And especially in hospitality, as technology continues to evolve and market share continues to become something that you really compete for, if you're not a discipline specific expert, you can put yourself into a world of hurt very quickly. And so sometimes we can step into rescue positions to help folks who have found themselves in water above their depth.
Yeah. So how do you guys go about finding these deals? Do you have target properties that you reach out to, or you have a trusted advisor network of bankers that are seeing these things happen in this space, or how does the deal flow start coming to you?
Yeah, nail on the head. That, in addition to we come on podcasts and talk about distressed opportunities.
Well done,
At the end, we leave an email address.
Absolutely. And your website and everything. Yes.
No,
Touché. I love it.
Right.
you're right. It's the lending community who can flag us when they start to identify a problem. It's a lot of franchisors who have assets that are starting to default, or who see assets that are independent that they might think they're the right fit for in a soft brand. It's management companies who want the opportunity to put in place some of their key leaders.
Sure.
And then generally speaking, there's a bit of a splash in a local subcommunity, or when you make an investment.
Sure.
When-
Everybody knows what's going on, right? I mean,
That's exactly right.
Yeah.
And there are things like the daily lodging that goes out that sort of reports on who's buying what. And so some of it comes just organically, as well as referrals from some of those other sources.
sure.
Candidly, some of our investors have been,
Because they visit resorts, right? I mean,
or their friends own them,
Sure.
or have been referral sources for us.
So
Right.
We found a new thing to, maybe, do on our spare time.
Yeah. Plenty of spare time to do that.
Just send him a report after, I love it.
Well, let's talk about you.
Yeah.
Let's tell us about your journey. Did you grow up in Indiana? Where'd you grow up? Where'd you go to school? That kind of stuff.
So I was born and raised in San Diego,
Okay.
and
The weather sucks there.
Yeah,
that's right.
what I
Well,
hear.
I moved here for the weather.
Yeah.
Oh,
Yeah.
absolutely. Like today.
Actually, we'll talk about that. But I born and raised in San Diego. I was really fortunate. I had a great childhood. Mom and Dad, if you're listening, thank you. Yeah,
There
great
you go.
childhood.
Well done.
But it was get outside and play every single day. It was tree houses and tire swings, dirt bikes, and
All the dangerous stuff. Now.
That's right.
Yeah.
That's right.
Love it.
Every weekend we'd go out hiking, and my entire day was outside. Today, my wife has a rule that I can bring the laptop to bed, but I can't bring the charger. And when the laptop dies,
It's time for sleep.
it's time for sleep.
Right.
And so
That's a good rule, by the way. I like that.
It feels very fair.
Yeah.
But you look at that
So
dichotomy.
how good's your battery?
I have a new computer now.
Yeah.
Yep.
That would
Fully
work in our
charged by
house.
10 p.m.
Yeah.
That's right. On the charger right up until bedtime. But I look at the dichotomy between who I was as a kid and even as a young adult, and who my peers, my friends are, and we're also glued to our devices.
Of course.
Part of the why are you doing what you're doing is, mission critical for us is to deliver return for our investors, to provide a great environment for our employee populations to work within. But mission critical for our guests is get them outside and get them to play.
Right. Put the laptop down, the phone away.
That's right.
Right.
So that's a little bit about the why. You asked about the me. So grew up in San Diego, moved sort of all over through work. I didn't go to school. I had my education through the wild world of hospitality.
That's School of Hard Knocks and such, right? Yeah.
It's why I am always the layperson in the room. And don't ask me history questions. Ask me financial performance for specific assets and
For hospitality.
There's
That's
a
right.
lesson to be learned in that, by the way, somewhere. Just by the way, so
I appreciate that. But I met my wife, Brandy, in Nashville 7 years ago.
better get that right.
That's well, hope so. Don't be mad. And Brandy was a nurse. I was a general manager at the time at a hotel in that market. We moved to Chicago together. Got married. That was 4 years ago now.
Congrats.
Thank you very much. I'm incredibly fortunate. She's the unsung hero of Storie Co. She's not a paid employee, but she is with me on half the darn trips that I go on.
You bet.
She ends up being the driver, and I sit in the right seat with a lap desk working. She's
the support engine.
Yes.
oh my gosh, yeah, she's absolutely incredible.
We have two spouses that are both nurses, by the way, so we're with you.
We can relate.
There we go. She's a PRN.
Yeah.
She's working with IU, so she enjoys the ability to work when she's not needed at Storie Co. and
Sure.
then be available when we need
Sure.
her help and support. Especially, we founded in 2022, so
Yeah.
we're a couple years old today.
Awesome.
That's awesome. So it was San Diego, and then where?
Los Angeles, then
Okay.
Los Angeles to Palm Springs,
Okay.
then Palm Springs to Nashville. While I was in Nashville, I did a little bit of support for Seattle in a task force capacity. Then Nashville to Chicago to Tampa,
Okay.
and then Tampa to Indy. And all those moves were in the world of hospitality. You get shuffled to where the need is.
Sure.
Chicago was to work with the REIT, and Tampa was to work with another REIT, Brookfield Properties, based on the East Coast. And Indy was to found Storie Co.
Okay.
And Indy
So you
has
did that intentionally.
Indy has been definitively the favorite place.
Oh, that's good to hear.
Why?
Why?
Yeah.
In San Diego, in Los Angeles, in Chicago, tons and tons of people, but you're 7 layers removed from anybody.
Right.
In Indianapolis, you're probably 1 layer removed from that person. And in Chicago, you'll send that person an email and maybe you'll get a response. In Indy, you're going to meet with them. You'll have breakfast.
Right.
You might not like the outcome of the meeting,
That's correct.
but you're going to meet with them because there's this, I don't know if it's Midwest Nice or Hoosier Hospitality, or I'm not sure what it is, but there's this passion in Indianapolis for people from Indy, even if you're a transplant, to succeed in the world of
You
entrepreneurship.
bet. Absolutely.
And that's unlike any other place I've been.
Wow, that's good.
It is very relationship driven.
Yes.
It
We were
really
just
is.
talking about
Yeah.
that just 2 hours ago
Yeah.
or an hour ago. I mean, literally. So, I mean, it's a big enough town to be big,
Yep.
but not so big where once you're a friend, you're a friend.
That's
Right.
exactly right. It
Yeah.
feels like a big, small town.
Yeah.
And the reason for the move to Indianapolis is I don't know if you all are familiar with Milhaus.
Sure.
Tad Miller.
Chad. Yeah, I've met him.
So Tad Miller going to go back to how Storie Co started once more. Chris Wall, my business partner, and I, he's the recovering banker. For your listeners, he and I had bought our first hotel, and we strung together friends and family for that raise. And,
Sure.
and we went out to an SBA lender and to get that done. When we went to buy our second hotel, it was just way outside of our personal fundraising bandwidth. We had never been in the business of raising capital before. We'd always been in the business of returning it. And we connected with Tad Miller, actually through a hunting buddy of his, who said, well, I think he raises some capital. If you all don't know, Milhaus is the 13th largest multifamily developer in the nation.
Wow.
They're
Unbelievable downtown presence. I mean, wow.
And the guy happens to be an incredibly nice guy.
Yep.
Very down to earth. And he, along with Greg Martin, his chief operating officer and partner, and Andy Lara of Onyx and East, they chose to invest in our parent company. And what came along with that was almost a business incubator. We office out of the Milhaus offices.
Oh, cool.
We have access to all of their back-end infrastructure. And so when we have a question for counsel, we're walking over to their in-house counsel, Quentin, who's a real friend, and as well as a colleague. When we're working on a development, adding 34 cabins to Pine Mountain, we're walking down the hall to Brad or to Jordan or to Austin for advice about how should we be looking at these plans. And it gives, a small company, we're
big leverage.
That's right. We're $120 million odd company. We get the infrastructure of a group that's got $2 billion in assets under management. Wow. And so it gives us the presence to be big while remaining small and nimble and able to tackle what's immediately ahead of us. So that's been such a happy marriage.
And they get a look at all your deals.
Oh yeah.
Brilliant for them, right?
That's exactly right.
Amazing. Yeah.
That's exactly right.
Right.
But if it works, it works.
And
right? I mean,
that's exactly right. And Tad's done that with a number of different groups. He launched a storage platform called Stacked, a manufacturing group, and among others.
nice.
That's cool. So, all right.
Go ahead.
I hope I don't get you in trouble with this question.
And if you do, say no.
What's your favorite resort property, hospitality property that you've been to in the United States, and why?
Well, that is a great question.
For you personally,
Yeah.
not
the
business wise,
business.
that you just really enjoyed and you thought, man, that's a really cool place.
We're going to come back to history. I had the pleasure of staying at the Greenbrier in
West Virginia.
Yeah.
Mm.
And, I can share with you that the luxury component is nice. That's not what is most important to me. I've had the pleasure of working in luxury assets before. We do not acquire luxury assets today.
Sure.
And I know that property sits in that camp, but it's over 1,000 acres. Brandy and I, we went on an 8-mile hike while we were there. We walked into the bunker, and for your listeners, if you don't know, there's incredible history related to that bunker. 400 of the 1,000 rooms at the Greenbrier were built by the United States government. President Eisenhower built it as a nuclear bomb shelter for Congress. There are rooms down there for the Senate and for the House to meet with full recording. They used to have it fully kept for them and their families with food provisions for a calendar year that they would recycle for forever. It was a state secret, or pardon me, a national secret kept for like 50 odd years.
Yes, sure.
And I'm going to butcher exactly the timelines and components of it, but
the idea is the idea.
So walking that property, walking the grounds, understanding the history, made for a really incredible experience for Brandy and I.
Sure.
And it was we were in a wedding in West Virginia, and it came immediately after staying in a room that had a tremendous amount, not the Greenbrier, had a tremendous amount of fleas and creepy crawlies, and we left shortly after check-in.
Yep.
I've done that before.
And so part of it was how wonderful and amazing the Greenbrier was, and then also part of it was just the total picture of that experience.
Right.
Sure.
So that's one that's, I think, high on my list. and maybe another would be if you're ever in Lake Arrowhead, California. It's near Big Bear. There's a really nice lodge there called the Lake Arrowhead Resort. It was the first project I worked on in an asset management capacity. The gentleman who was the general manager there, longtime friend, we worked together a number of different times. And I have an emotional connection to that asset because of the dire straits it was in at one point, and the great position it's in today. And so that's one that has a special place in my heart for personal reasons.
Nice.
That's awesome.
So talking about personal stuff, right? We talked before we started recording, your pilot. So you get to fly around, right? Sometimes in your own plane and those kind of things, but you have a flying partner that I think we need to talk about, if I recall. Other than Brandy.
You're talking about, so full disclosure, I don't yet have my pilot's license.
Okay.
So don't sign up for the flight with me.
Okay. Fair enough.
I'm a great flyer of airplanes. Lander, I don't know.
It's
That's pretty
optional, by the way. Yeah,
Just get some bigger wheels on there.
that's right.
As Jim, who's a good friend and a flight instructor, would share, I am so good at landings that I try and do them multiple times.
Just to make sure. Yeah.
Well, you're trying to get plenty of practice in.
Yeah,
That's
right.
exactly
Three
right.
bounces is fine.
That's right. Well, that's an average.
Is
He
that the
doesn't think
hardest
that.
part of
Oh,
flying?
for sure.
Yeah.
For sure. Landing is
really
the most
hard,
difficult
yeah.
component.
Okay. Travel partner, maybe not by plane. But
But yeah, our travel partner is Rudy, which is our 1.5-year-old mini Aussie doodle.
yeah.
He is a little lunatic. He's got a Snoopy costume and ear mutt muffs for when he has the pleasure of flying. And so it's definitely, I'll send you the photo. It's worth seeing.
We're going to insert the photo here.
Oh,
Just making a
absolutely.
note. It'll pick it up in the text output.
Fun.
Cool.
Awesome.
Yeah. It's such a great picture.
So is
It really
Rudy
is.
going to deliver some gifts this year via plane?
Yeah, that's exactly
Is that
right.
the plan?
And Adam, you're hitting the nail on the head, right? His name is Rudy because he was born on the 25th of December, so he's short for Rudolph. So look, the plane window opens, and so I think the FAA frowns on disposing of items out of there.
Usually.
But
Yeah.
we'll aim for the chimneys, and so there's got to be a learning
I
curve
was
there
thinking
somewhere.
parachute on the dog, right? It's like, come on, Rudy's. Yeah. Just
The near miss is okay.
yeah. It's
right?
all right.
That's right. That's right.
So how
That's
many
awesome.
hours do you have, in your process of getting
Yeah,
your
what's
license? Where are you in the kind of the journey of getting your license?
So Jim is going to give me a hard time when he listens to this. I've got like 65 odd hours. I have way more hours than you need to be able to get your license. And a part of that is, we're acquiring and we're developing hotels in areas that are best serviced by
Private
a private plane.
Sure.
And for your listeners and for clarity, I fly a Cessna 172, which is the equivalent of like a 84 Volvo sedan with 400,000 miles
You
on
haven't
it.
hit the Gulfstream yet. Is that what you're saying?
We need a few more projects to round trip before I can even make eye contact with the Gulfstream.
You betcha.
In the interim, I walk around with a screwdriver to make sure that that's exactly right. But the bucket
You
of
check your parachute before every launch.
that's exactly right. Yeah.
Awesome.
Well, you can always glide your way in. But yeah, I've got plenty of hours. I've not had the diligence to take the test yet because Jim and I are able to fly to various assets and accomplish the goal. And Brandy is certainly not comfortable with me flying by myself until I probably have 150, 200 hours. And
Just
so
rack them up for a while. And
that's
sure,
right. And
it's
so
okay.
in the coming weeks, I certainly need to get my formal license. In the interim, I am still under his pilot in command.
Tutelage.
Under his
Tutelage.
Tutelage.
Yeah, that's
Tutelage.
right.
Yes. Awesome.
Awesome.
Any others?
No.
Okay.
So how would people come to find out about you?
Yeah.
Or how should people come
Find
to
you.
discover you?
Well, we're online, certainly. StorieCoLLC.com is our website.
Got it.
Folks, I'm on
And it's
LinkedIn. As
STORIE.
thank you so much.
Yeah, right.
STORIE COLLC.com.
Is there a story behind the story?
Story is spelled the Italian way,
Okay.
For Della Story, which is of stories, and we're acquiring properties and assets that have a rich history.
You bet.
And ultimately, in the world of hospitality, you don't walk away from a hotel experience with a physical item. You walk away with a story, with a memory, and an experience.
You bet.
That's what we transact on, and if we're doing it right, it never actually is a transaction. It's what you're describing, an experience.
Awesome. Any other things? What 2025? What do you see ahead?
In the 2025 year, I think we'll buy somewhere in the neighborhood of 6 to 8 hotels and resorts in the greater Midwest. I think that there are going to be interest rate cuts. Wahoo!
Yeah,
Please,
maybe.
please,
Right.
please.
Drum roll.
Yeah,
If the Fed's listening, that would be great. We really
that'd be
appreciate it.
nice. Yeah.
Alan Greenspan, come back, please.
Yeah, that's right. That's right. And I'll have a pilot's license. That'll be fun and exciting. But-
Rudy will be 2.5 then in 2025.
That's exactly right.
All
It'll
right.
be
That'd be
a
fantastic.
big birthday, 2-year-old birthday.
There you go.
All of Indy's invited.
The address is to be
Yeah.
determined.
That's right. That's right.
Yeah.
That's right.
It's an open
Awesome.
bar though, right?
Oh, of course. Of course.
Okay. All right.
Absolutely.
Hors d'oeuvres, caviar.
That's it.
Keep listening because the address will come in a future podcast.
Yeah, that's right.
Episode 3,
Well,
which
one,
airs in 2026.
that's right.
That's right. That's exactly right.
Well, first of all, thank you for coming. What a fascinating story. I mean, we've done a lot of these, and they're all good. But from a niche standpoint, and just your background and how you ended up doing what you're doing at the age you are, to be frank, because we're old and you're young, right?
Very impressive.
Really neat.
Thanks.
Really
Thanks,
neat.
y'all.
Yep.
I was been around a lot of people a lot smarter than me who made the mistake of investing their time into me. So it has very little to do with my own prowess.
Well, it's rubbed off.
That's
It really
rough.
has.
It's really
Thank
good.
you.
Yeah,
Thank
we
you. It's
really
kind.
appreciate it.
Well, I appreciate it as well. Thanks for having me.
Oh,
I'm
you're
really happy to be here. Happy to connect with your listeners. And this is a great conversation.
Yeah.
Yeah,
Awesome.
That's what we want.
Thanks.
Appreciate it.
Yeah.